China-US tariff war could benefit India big time. Will phones and TVs get cheaper? Have you ever imagined that a conflict between two superpowers could actually lighten your household budget? And not just by chance, but in your favor? That's exactly what's happening right now with the tariff war between the US and China. The US has slapped a massive 125% duty on Chinese imports. This decision isn't just shaking up the trade dynamics between two countries, it's redirecting the global supply chain, and on this new path, India is taking the lead. Why? Because as Chinese companies now seek new markets, India stands ready with a massive consumer base, rising demand, and a new mindset. This moment is a strategic opportunity for India and at the same time, a source of relief for Indian consumers. In the coming months, products like TVs, refrigerators, and smartphones may become more affordable, all thanks to a deeper global shift. Today, we are going to dive into this subject and unpack the strategy behind the scenes. But before we begin, if you are new to our channel, don't forget to subscribe so you never miss an update. Let's begin today's discussion without any delay. Let us tell you, this didn't start overnight. The tariff war between the Trump administration and China has gradually escalated into a full-blown economic battle. On 2nd April, US President Donald Trump first imposed a 54% tariff on Chinese goods. In response, China retaliated with a 34% tax on American products, not as a compromise, but as a clear warning: China will not back down. But Trump wasn't backing off either. He responded by raising tariffs to 104%, and then China hit back again with an 84% levy. And when that too didn't seem enough, on 9th April, Trump made a bold move, increasing tariffs to a staggering 125%. This decision sent shockwaves through global trade. Now, a new angle of this trade war has emerged, and it's a golden opportunity for Indian consumers and companies. With the US making Chinese goods unaffordable, Chinese companies are now losing orders. Products that once filled American warehouses are now piling up in Chinese factories. Production hasn't stopped, but buyers are vanishing. And that's where the discount game begins. Chinese manufacturers are now targeting markets like India, looking for new buyers. Indian companies are being offered up to 5% discounts, and these price cuts won't stop at businesses. They'll trickle down to the everyday consumer's pocket too. Kamal Nandi, head of the appliances business at Godrej Enterprises Group, says, with demand falling in China, component manufacturers there are under pressure. This gives Indian companies a fresh chance to renegotiate rates, which could lead to price cuts. In simple terms, this means that in the coming weeks and months, we may witness a drop in product prices. Consumers could get the same quality and brands, but at lower prices. This won't just bring relief to households, but could also boost domestic demand, which is a positive sign for India's economy. Avneet Singh Marwa, CEO of Super Plastronics, also pointed out that production in Chinese factories continues to rise, but a lack of new orders from the US is putting pressure on manufacturers. Now, these companies are not only eager to clear old stock, but are also ready to accept new orders at any price. This scenario is highly favorable for Indian companies who can now source components directly from China at better prices, rather than relying on old suppliers. And when input costs fall, final product prices follow. This is the domino effect, and it could bring real relief to the average consumer's budget. Now let's move to another crucial point: India's self-reliance. In recent years, the Indian government has accelerated initiatives like Make in India and Atmanirbhar Bharat, and their impact is now becoming visible. According to a GTRI report, in financial year 2024, India's import of electronic components jumped by 37%, reach 𝐼NG $34 billion. This figure reflects one key fact: domestic demand is rapidly rising, and if this demand can be met through local production, it could significantly strengthen the Indian economy. Several government initiatives like the PLI scheme, production-linked incentive, quality control orders, QCOs, and higher import duties are now helping domestic companies stand on their own feet. As a result, Indian firms are not just assembling products anymore, but are moving toward manufacturing components themselves. The India Cellular and Electronics Association has set an ambitious goal to take India's component manufacturing to $145 to $155 billion by 2030. Yes, it's a bold target, but it's not impossible, especially now, when countries like China and the US are locked in conflict and India is being increasingly seen as a viable alternative. Now the big question is, who truly benefits from all this? The simple answer is you and me. The smartphone you are buying today for 20,000 could soon be available for 18,000. A TV that costs 45,000 might drop to 40,000. Everyday appliances like refrigerators, washing machines, and air conditioners could become noticeably cheaper. And this price drop? It's just the beginning. As India's imports from China increase and prices drop, competition will intensify. Companies will be forced to offer better products, stronger warranties, and cutting-edge technology to attract customers. But here's a warning too. If India sees this moment only as a chance to import cheaper goods and doesn't take serious steps toward increasing its own manufacturing, this opportunity could slip away once again. That's why it's essential that India uses this situation to become technologically stronger. We must focus on skill development, innovation, startups, and research so we become not just consumers, but creators. Only then will these benefits be sustainable, and only then will the country move toward true self-reliance. Viewed from a global perspective, the US-China trade war has triggered a massive realignment in global supply chains. Companies across the world are now adopting a China plus one strategy, and India stands to gain significantly from this shift. If India understands this trend and strengthens its systems in terms of infrastructure, policy, and ease of doing business, then major global companies may soon set up factories, R&D centers, and innovation hubs here. This would mean more jobs, more technology, and a real shot at India becoming a global manufacturing powerhouse. But the most important point is, this opportunity is not permanent. It's a limited time window, and if India doesn't act in time, countries like Vietnam, Indonesia, and Bangladesh will seize it. That's why this is not just about economic strategy, it's about nation building. And it requires the right policies, sharp planning, and strong political will. Ultimately, we must understand. The cheaper TVS, fridges, and mobile phones we are seeing today aren't just the result of discounts. They are a consequence of a trade war being fought elsewhere, but whose rewards are landing in India's lap. The US-China conflict has shown India a new path, a path from being a market to becoming self-reliant. Now it's up to us, how far and how fast we walk this path.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.